Welcome to the big leagues of business ownership. Whether you're just starting out or you've been running your company for years, the decisions you make now will shape your financial future. The world of entrepreneurship is exciting, but it's also filled with challenges that demand your attention and expertise. You've formed your LLC and you're ready to build your empire, but taxes can make or break your success. Every dollar you earn, every expense you track, and every form you file can have a major impact on your bottom line. It's not just about making money, it's about keeping it. The IRS has a playbook, and if you don't have your own, you're leaving money on the table. Their rules are complex, but with the right knowledge you can turn those rules to your advantage. Think of taxes as a game of strategy, one where the best prepared player wins. This isn't just about compliance, it's about strategy. Smart business owners don't just react, they plan ahead, anticipate changes, and position themselves for long-term growth. The right moves now can save you thousands later. Understanding how your LLC is taxed is the single most important step to protect your profits and build real wealth. It's the foundation for every financial decision you'll make, from hiring employees to reinvesting in your business. This year, being proactive is critical. Tax laws are always evolving, and what worked last year might not work this year. Staying ahead of the curve is the only way to avoid costly mistakes. Subtle shifts in regulations can catch unprepared business owners by surprise. Even a small oversight can lead to big penalties or missed opportunities for savings. The IRS won't tell you the best way to structure your taxes. That's your job as CEO. You have to take charge, ask the right questions, and seek out the best strategies for your unique situation. We'll break down the fundamentals, expose lesser-known strategies, and give you the tools to face tax season with confidence. You'll learn how to spot opportunities, avoid common pitfalls, and make informed decisions that pay off. Tax planning is about using the code to your advantage, legally and ethically. It's not about shortcuts, it's about understanding the rules and making them work for you, so you can focus on what matters most, growing your business. By the end, you'll have a concrete game plan to keep more of what you make in 2025 and beyond. Let's get started and set you up for lasting success. What exactly is an LLC, and why do so many entrepreneurs and small business owners choose this structure over others? The answer goes beyond just legal jargon or paperwork. An LLC is a powerful tool that can shape the future of your business. An LLC, or limited liability company, is a hybrid business structure, combining the liability protection of a corporation with the operational flexibility of a partnership or sole proprietorship. This means you get the best of both worlds, strong legal protection and the freedom to run your business your way. If your business is ever sued or falls into debt, your personal assets, like your house, car, or savings, are generally protected from creditors. This separation between your business and personal finances is one of the main reasons people choose an LLC. Unlike corporations, LLCs have fewer formal requirements. There are no mandatory annual meetings or complex record-keeping rules, so you can spend less time on paperwork and more time building your business and serving your customers. This blend of protection and simplicity makes the LLC a top choice for entrepreneurs, freelancers, and small business owners who want to grow without unnecessary stress. Imagine you're a graphic designer, running your own studio. You pour your heart into your work, but one mistake or unhappy client could threaten everything you own. As a sole proprietor, a lawsuit could put your personal assets at risk, making every business decision feel like a gamble. But as an LLC, the lawsuit targets the business itself, not you personally, creating a legal firewall around your personal life and giving you peace of mind. This legal separation is the foundation of why people form LLCs. It's not just about following the rules, it's about building a secure future. With an LLC, you can take calculated risks, pursue new opportunities, and grow your business, all without jeopardizing everything you've worked so hard to achieve. The LLC isn't just a registration, it's a critical layer of asset protection and a smart move for anyone serious about their business. For any serious entrepreneur, it's a must-have shield, one that lets you dream bigger, act bolder, and protect what matters most. Now let's talk about how the IRS views your LLC. This is a crucial topic for any business owner because how your LLC is classified for tax purposes can have a big impact on your bottom line, your paperwork, and your peace of mind. Many new entrepreneurs are surprised to learn that the IRS doesn't actually recognize an LLC as a separate tax entity. Instead, it looks at the people who own the LLC, called members, and taxes the business based on their situation. The IRS doesn't have a specific tax category for LLCs, instead it looks at the owners. This means that the way your LLC is taxed depends on how many people own it and the choices you make about its tax treatment. The default rules are simple, but understanding them is the first step to making smart decisions for your business. If you're the sole owner, your LLC is taxed as a sole proprietorship by default. Profits and losses go on your personal tax return. This is called pass-through taxation because the business itself doesn't pay federal income tax. Instead, all the income, deductions, and credits pass through to you, the owner. No separate business tax return is required. Income passes through to you, and you pay income and self-employment tax. This can make things simpler at tax time, but it also means you're responsible for paying both the employer and employee portions of Social Security and Medicare taxes on your business income. If your LLC has 2 or more members, it's taxed as a partnership by default. This means the LLC itself doesn't pay income tax, but it does need to file an informational return with the IRS. The business files an informational return, Form 1065, and issues a Schedule K-1 to each member who then reports it on their personal return. Each member pays taxes on their share of the profits regardless of whether the money was actually distributed to them. For 2025, understanding these default settings is crucial. They're the baseline for your tax strategy. If you don't actively choose a different tax status, these are the rules that will apply to your LLC. Knowing this helps you avoid surprises and plan ahead for your tax obligations. The Corporate Transparency Act also brings new reporting requirements. Most LLCs must file a beneficial ownership information report with FinCEN. This is a new federal rule designed to increase transparency and prevent financial crimes, and it applies to most small businesses formed in the U.S. Failure to comply can mean severe penalties. The fines for missing or incorrect filings can be steep, and in some cases, criminal charges are possible. It's more important than ever to stay on top of your compliance requirements. Knowing your default tax status is step 1. It's the foundation for making informed decisions about your business's future, and it helps you avoid costly mistakes. But here's the real power. You don't have to stick with it. The IRS gives you options, and you can elect to have your LLC taxed as a corporation or even an S-corporation if it makes sense for your situation. You can choose a different tax path for your LLC. This flexibility is one of the biggest advantages of the LLC structure, allowing you to adapt as your business grows and your needs change. That's where strategy comes in. By understanding your options and working with a knowledgeable advisor, you can choose the tax treatment that best fits your goals, minimizes your tax burden, and keeps your business on the right side of the law. Pass-through taxation is central to most LLCs. Unlike a C-Corp, which faces double taxation, a pass-through entity avoids that first layer. Profits and losses go straight to your personal tax return. For example, if your LLC earns $100,000 and has $30,000 in expenses, your $70,000 profit is added to your personal income. You pay income tax at your individual rate, not the business. But here's the catch: self-employment tax. As a business owner, you pay both the employer and employee portions of Social Security and Medicare, currently 15.3% on most profits. For $70,000 in profit, that's nearly $9,000 in self-employment tax on top of income tax. Many new LLC owners are surprised by this hefty bill. Budgeting for both income and self-employment taxes is essential. Understanding this mechanism is the key to unlocking advanced money-saving strategies. Let's look at how you can do just that. Here's the most important thing about LLC taxation. Your tax status isn't set in stone. The default, sole proprietorship or partnership, is just a starting point. You can elect for your LLC to be taxed as a corporation. This is done through a check-the-box election with the IRS, choosing either C-Corp or, more commonly, S-Corp status. This doesn't change your LLC's legal structure, just how the IRS taxes your profits. The IRS won't advertise this option. It's up to you to know and act. Most new business owners miss this, overpaying taxes year after year. Choosing your tax treatment is the ultimate LLC advantage. The real question: how should your LLC be taxed to maximize your savings? The S-Corp election is the most powerful move for many profitable LLCs. As an S-Corp, you become both owner and employee. You must pay yourself a reasonable salary, subject to payroll taxes. but profits left after salary can be distributed as shareholder dividends, free from self-employment tax. For example, with $70,000 in profit, pay yourself a $40,000 salary, taxed as wages, and take the remaining $30,000 as a distribution, saving thousands in taxes. The IRS requires your salary to be reasonable. You can't just pay yourself $1. S-Corp status means more paperwork, payroll, and a separate tax return, Form 1120S. But for many, the tax savings far outweigh the extra admin. The S-Corp election is a cornerstone of smart business tax planning. It's a strategic move that can put real money back in your pocket. Consider it if your LLC is profitable and you want to minimize self-employment tax. Beyond S-Corp status, there are more ways to cut your tax bill. Keep meticulous records, use accounting software, save receipts, and separate business finances. Every legitimate expense, from supplies to mileage, reduces your taxable profit. Max out retirement plans like a SEP IRA or solo 401k to shelter income and build wealth. Hire your kids for real work. They can earn up to the standard deduction tax-free and their wages are a deductible expense. Time your income and expenses, prepay next year's bills or delay invoices to manage your tax year strategically. These moves can make a big difference at tax time. Proactive management is key to keeping more of your money. Don't wait until tax season. Plan all year long. Avoiding mistakes is just as important as finding savings. Don't forget estimated tax payments. Miss them, and you'll face penalties. Never mix personal and business finances. It can destroy your liability protection. Misclassifying workers as contractors instead of employees can lead to huge IRS penalties. Know the S-Corp election deadlines, miss them, and you lose out on savings for the year. Stay organized, follow the rules, and treat your LLC like a real business. These simple habits protect both your wallet and your legal shield. Be proactive, not reactive. Let's recap the winning strategies for your LLC in 2025. You control your LLC's tax destiny. Don't settle for the default. The S-Corp election can save you thousands by reducing self-employment tax. Tax planning is a year-round process. Keep good records, maximize deductions, and use retirement accounts. Avoid common mistakes like missing estimated payments or mixing finances. Consult a qualified tax professional. They'll help you optimize your strategy and stay compliant. Take control, implement these strategies, and make 2025 your most profitable year yet. Your LLC's success starts with smart tax moves.